Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are up slightly today. Dow Jones is up 0.3%, Nasdaq up 0.4%, S&P 500 up 0.4%, and Russell 2000 is flat. Oil is at 65, and yield curve is down a few basis points. On the heat map, we can see that Tesla is up 6%, Palantir up 3%, AMD up 2%, and everything else is pretty mixed. Healthcare is down a little bit. Let's read out the daily article. Wall Street rises on US-EU trade deal prospects. Intel falls. Wall Street's main indices were higher on Friday after EU officials signaled that a framework trade deal with the US could be signed as soon as this weekend, while Intel tumbled following a disappointing forecast. Intel, we're going to look into the company's specific reports. Wall Street is being rewarded for its belief that these are negotiating tactics rather than realities, and until that changes, investors will continue to be encouraged by additional agreements. The flurry of trade progress, including fresh agreements with Japan, Indonesia, and Philippines, helped set the three major indices on track for a strong finish to the week if gains hold. However, the week also saw some setbacks. Heavyweights Tesla and GM stumbled and were on track for the steepest weekly losses in nearly 2 months if the declines continue. Traders now see a 64% chance of a rate cut in September, according to CME's Fed Watch tool. All right, let's move on to trade specifics. Trump says the U.S. may not have a negotiated trade deal with Canada. Washington, the U.S. may not reach a negotiated trade deal with Canada, U.S. President Trump said on Friday, suggesting his administration could set a tariff rate unilaterally. Trump, speaking to reporters as he left the White House for a trip to Scotland, said, "We haven't really had a luck with Canada. I think Canada could be one where there is just a tariff, not really a negotiation." The two nations are trying to work out a trade deal before August 1, when Washington is threatened to impose 35% tariffs on all Canadian goods not covered by the U.S.-Mexico-Canada trade agreement. Carney's office did not immediately respond to a request for comment. Canadian officials have increasingly made clear that the chances of a deal by August 1 are unlikely. Dominic LeBlanc, the federal cabinet minister in charge of U.S.-Canada trade, told reporters in Washington on Thursday, after 2 days of talks, that we've made progress, but we have a lot of work in front of us. LeBlanc said Canada would take the time necessary to get the best deal possible. Carney indicated last week that Canada might not be able to persuade the U.S. to lift all of its sanctions. Trump also says that there is a 50-50 chance of a trade deal with the EU. President Trump on Friday said there was a 50-50 chance of it, or perhaps less, that the U.S. would reach a deal with EU, saying Brussels wanted to make a deal very badly. "We're working very diligently with Europe," the EU Trump told reporters as he left the White House. "I would say we have a 50-50 chance, maybe less than that, but a 50-50 chance of making a deal with the EU. Asked the second time about the process for an agreement, he said, "That's the big one right now. I think the EU has a pretty good chance of making a deal right now." The European Commission on Thursday said a negotiated trade solution with the US was within reach, even as EU members voted to approve counter tariffs on 93 billion euros of US goods in case the talks collapse. The 27-nation bloc's executive has repeatedly said its primary focus is on reaching a deal to avert the 30% import tariffs that Trump has said the US will apply on August 1. To get the deal, Trump said the EU would have to buy down that tariff rate, although he gave no specifics, I guess similar to what Japan did. EU diplomats say Washington and Brussels appear to be heading towards a possible deal that would result in a broad 15% tariff on EU goods imported into the US, mirroring a framework agreement Washington struck with Japan. But the White House said discussions of a deal should be considered speculation. Trump trade advisor Peter Navarro told Bloomberg News the report from the EU should be taken with a grain of salt. There was little information available about what the EU would offer the US to secure a deal. One EU diplomat said the bloc was not looking as a pledge of investment in the US as Japan has agreed. Now, on Fed, Trump clashes with Powell over Fed renovations during unusual visit, says he'd love lower interest rates. I think this has been covered pretty well. I don't think there's anything new in this article, so let's skip this one. Intel is cutting more jobs as CEO Tan tries to fix manufacturing missteps. Intel is going to end the year with a workforce that's over a fifth smaller than last year, it said on Thursday, and new CEO presented a blueprint for a more cost-disciplined, streamlined chipmaker that would issue no more blank checks. The job cuts, a majority of which have been completed already, are part of an effort by Tan since he took the helm in March to turn around the storied US chipmaker. Intel has divested businesses, laid off employees, and redirected resources. The company has underperformed due to years of management blunders. Intel has virtually no foothold in the booming AI chip industry that is dominated by NVIDIA, and its longtime rival AMD has been gaining share in Intel's mainstream personal computer and server semiconductor markets. Its ambitious and costly plan for a chip contracting business that rivals that of Taiwan's TSMC has failed to take off. But CEO on Thursday signaled that he had taken charge of the company and was trying to wrest it back from what he viewed as previous missteps. There are no more blank checks, CEO wrote in a memo to employees. Every investment must make economic sense. We will build what our customers need and when they need it and earn their trust through consistent execution. But shares still fell 5% extended trading after the company forecast steeper third-quarter losses than Wall Street estimated. Tan also told analysts on a conference that he believes Intel's so-called 18A manufacturing process, in which his predecessor, Pat Gelsinger, had deeply invested, could generate a reasonable return only if it is used for Intel's own products. Reuters reported earlier this month that Tan is debating whether to quit offering the technology to external customers. As part of the job cuts, Intel attempted to take a surgical approach and remove layers of middle management. Finance chief told Reuters, "We took out about 50% of the layers of the company," he said. The company is cutting its workforce by 15% from 96,000 that it reported at the end of June. It plans to further reduce the headcount to 75,000 by the end of the year, down 22% from the end of 2024, which will be through attrition and other means, according to the company. Tan will review. They may have overspent on 18A, but I think this is the painted picture of a new fiscally disciplined base that they're going to go from here, said Benjamin Baharin, CEO of tech market analysis firm. In the memo to employees, Tan said Intel is changing its strategy to building manufacturing capacity and now plans to build factories only when the demand for its chips is there. This is just a lot of promises, I think. I don't really see. Expects revenue of $12.6 to $13.6 billion for September. And billions of dollars of losses. Restructuring costs of $2 billion in the second quarter. Yeah. All right. That's still a wait and see type of story. Let's move on to Deckers. Shares soar on rising demand for Hoka, UGG footwears in China and Europe. Deckers Outdoor beat first quarter revenue and profit estimates on resilient demand for its sneakers and boots in international markets, sending the shares of the Hoka parent surging 18% on Friday. Solid demand for Hoka shoes and UGG UGG boots in Europe and China shielded Deckers from the impact of tariff-related concerns and sticky inflation on consumer spending in the US, its largest market by revenue. Coming off a spectacular fiscal 2025, Deckers faces uneven US sportswear demand, higher tariffs on imports, and tough comparisons after strong Hoka wholesale selling last year, said Morningstar analyst in a note. Yet it is capitalizing on large international opportunities and its brands remain popular. All right. On that note, thank you very much, everybody, and enjoy your weekends. I will chat with you all next time. Take care.